Hey, Colorado Springs. Today, we are talking about a deal analysis where one of Jenny's clients sold a property they bought a year ago, utilized a 1031 to buy into a new build townhome complex. So Jenny Bell is going to run us through all the details, the numbers, and the pros and cons behind the thought process of selling and trading up into a new property. So a fun podcast with lots of layers on here. So Jenny, glad to talk about this with you.
Me too. I think this one's going to be a fun one to go through.
Yes. So before we jump into the new build townhome that they bought in Colorado Springs, back up because they bought a property with you a year and a half ago.
Yeah, so they bought a townhome about a year and a half ago. Then they bought another townhome, and then they bought their primary home, and now we're talking about this one.
So which one of those earlier properties did they sell to get in this? Like, set that story up for us.
I think it was their very first one. I can't remember which townhome came first, but I think it was their very first townhome.
Okay, well, let's just a general overview of that.
So they bought it for $190, put 15% down, and they were able to trade in that smaller, older townhome into a brand new, larger townhome for, I think, $10,000 out of pocket.
Wow. All right.
So, yeah.
And so what was the motivation for them to sell that previous townhome? They've only had it for a year and a half. That's usually on the shorter side of the hold period for 1031ing.
Yeah, so it was a couple of factors. One, I would just kind of remind them of how much it went up in appreciation when I'd see them, just like, hey, by the way, your house appreciated a lot. And they're like, man, that's really interesting. So, and then they also have another newer townhome or new build townhome that they bought, and they really like that one because it's just, I mean, you don't even have to think about it really. So when in conjunction between letting them know that their property appreciated a lot and then them really liking the new build, they thought, hey, whenever this new neighborhood comes out, we want to sell this, other townhome and trade it into a new build.
And this is a really good thing to highlight. I mean, this client's a prime example. They bought this place, a year and a half ago or so, and it still made sense based on market conditions and price appreciation and loan to value to sell and trade up. Mm-hmm. And so for people who bought in the last year or two, like, always worthwhile to look at, see opportunities are, because we have seen that big appreciation the last couple of years. And it's a great way to tap into real estate piggy bank and see what may be a better trade up for you.
Yeah. And what I really like about this story is that Envision clients bought their townhome that they traded up from, and they raised the rents on that townhome. So it's a fantastic purchase for them too. So it's just like win-win all around. So I think that it's kind of like an interesting look at the ecosystem of investors, where they're at in their journey.
I totally agree. And that's always a great thing to talk about, like, especially in 1031 exchanges. There are usually multiple levels of like winning. Like you said, they sold their property and they're like, hey, no longer this is where we want to hold our money, nor is the best case. But for another investor with different goals and a different investing phase, it was a great buy for them where they got it, a good property, and also do a little value add by increasing their rents, which is a very, very easy lift to do. Mm-hmm. And they won and the other clients won.
Yep.
So let's jump in the numbers on here. So this is a new build townhome, and I believe this is a complex. I know we've talked about this. Like, you have a couple under contracts in here, right?
Yes.
Yeah, give us the overview on what's going on.
Yeah, so they were the very first section, I guess. So there's supposed to be 12 blocks of 4 in this development, and they were the very first section. They closed, I think, 2 weeks ago. And we have several other Envision clients in pretty much all the release sections at this point, between working with myself or Leah.
Really?
Yeah, because they just make really, really good rental properties. They're located really close to Peterson Air Force Base. Brand new builds. Like, it's just, very low maintenance, inside and outside. So it's just a fantastic product.
All right.
Yeah.
All right, so going to here. What's their down payment? What's their purchase price?
Yeah, so they were able to put 25% down just based on what they were able to take away from their relinquished property. I think I mentioned they put, $10,000 out of pocket just to get to that 25%, to get to that better rate, interest rate. Since they were the very first, we'll say guinea pigs, which, as you know, like, if you're the first to enter a development, you typically get better prices. So they bought their property for $330,000.
And you had said earlier that some properties, or this just appraised another property, like we've already seen some of the price bumps.
Yeah, so these same clients, their appraisal came back at $350,000 before they even closed on it. We have a couple. I think Leah has a client at $360,000, and it still works at that price. So because they're first in, they got equity, and because some of our clients, they're like building 5 or 6 out of 12, I think that they stand to grow a lot of equity as well. So I think that, because of the strategy that the builder has for this development, I think all of our clients are going to see a lot of equity potential for sure.
Yeah. Great. And so for all in, they're all in for about $92,000. And you said about the majority of it, $87,000 came from the proceeds of the previous townhome, and they threw an extra $10,000 to meet that 25% down payment threshold.
Yep.
Now this one, they were at about 4 1/8 interest rate.
Yeah.
So leave it on there. But again, we're going to update it to today's rate around 6%, so we can see how that impacts things. Mm-hmm. But this is less focusing on the cash flow and more focusing on like that portfolio optimization, about how people can still trade up to make moves that makes the most sense for their goals and their just day-to-day portfolio and preferences.
Yeah.
So rental rates.
Yeah. So this was an interesting story. So they have a new build townhome in a development that we have a lot of Envision clients in as well. And they had 2 highly qualified applicants come in at the same time. So one person, I guess he could wait a couple days to move in, and they said, hey, do you want literally a brand new home? Yes, I do. So they were able to fill 2 vacancies at once. He got the keys the same day of closing, so they had 0 vacancy for this one.
Wow. So and that just goes to show like the strong rental demand. Like,
yes.
Again, we're talking about how interest rates and price are going up. There's a high demand for rentals as well. Mm-hmm. And that right now is, what's, again, a very, very attractive thing to us landlords, because it helps to make the numbers work.
And I mean, who doesn't want to live in a never before lived in home before?
I mean, that's my preference.
Yeah, I think that's great.
So we got kind of the standard vacancy of 3%, all the other stuff. Property management, so they are self-managing.
They are.
Okay.
Mm-hmm.
They're self-managing, and they live up here in Denver, I believe, if I'm thinking of the same
Parker.
client. So,
mm-hmm.
Okay, live in Parker. They're self-managing this, so what, a 15-minute drive?
Yeah, it's not very long. Probably an hour on a bad day.
So 5% monthly reserves. Again, townhome, plus it's a new build, mm-hmm. so it probably has the 1-year new build warranty.
It has a 1-year new build warranty, so we'll just throw that in there for good measure for future years. But all they had to do is buy a washer and dryer at this point.
The monthly HOA is about $150 a month. Cover the standard stuff.
Yep.
Okay.
Like snow and landscaping.
Taxes, $1,200 a year. Insurance, about $900 a year.
Mm-hmm.
All the other utilities are off blank, meaning that the HOA or the tenant is paying for them, right?
That's correct. So trash is covered by HOA. Tenant is responsible for all utilities. And then taxes, that's just based on a best guess because they're currently paying land rate until it gets reassessed. So they kind of get like a year or 2 freebie on that.
Yep, and then when it goes around next time, they'll probably jump up.
Mm-hmm.
Well, I don't know how much it jumps up down there, but it'll jump up some.
I think 1,200 is a good estimate.
You're saying that's the estimate for when it jumps up?
Yes.
Oh, wow, that's like the land value up here in Denver.
Oh, no, that's post.
That's your.
That's reassessment.
Okay. Great. That still seems all right. It's all perspective.
Yeah.
All right. So jumping the cash flow here, and we have this at 4 1/8 right now, just for comparison, because this is what we're gonna be doing for a bit while we're got 1 foot in old stuff, 1 foot in new stuff.
Yeah.
So about just under $23,000 a month in gross annual income. Subtract out vacancy, all the expenses. The biggest expense being mortgage payments, and they're about $2,600 a year in cash flow at a 5.1% cap rate. Mm-hmm. So I'm assuming they're probably very happy with that while they're getting a brand new build townhome.
I was going to say, 5.1 cap in Colorado Springs and a new build, that's a combo that you don't typically get.
No, that sounds very attractive to me.
Mm-hmm.
All right, so now we'll bump this up to 5 1/8. Because we'll just do it as if people are getting an ARM loan,
sure,
where it's a little bit cheaper. So going up 1%, that drops cash flow down to about $900 a year. So still cash flow positive, I mean, nothing great, but hey, cash flow is cash flow.
Mm-hmm.
And if we want to go to the 30-year fixed route, we will jump up to 6% right now. And that jumps it down to about a negative $700 a year in cash flow.
Mm-hmm.
So you can see there what that difference in interest rate does and how you can manipulate it and play around with it to help you find the right deal.
Yeah.
Now, either one here, we're talking like, and this is from my perspective, we're talking, higher interest rate, negative $700 a year, back to where it was a few months ago was like $2,000 or $2,500 a year in cash flow. I mean, neither one's huge. I mean, you always want more positive cash flow. But, I mean, basically, this is a break even in my mind with $700 a year in negative cash flow. That something swings one or the other, or we have a zero vacancy for 1 year.
Mm-hmm.
Well, now we're down to like a break even easily. So it can definitely swing some. But this is where, in my mind, as people hear all these interest rates rising, great, plug in the numbers and make sure you understand how that actually impacts it and realize that a lot of times a few bucks one way or the other are not a big deal. Because the 4 ways we went in real estate, we're still seeing a return in a 20% plus range, and that's still some very good return on investments.
Yeah, so
I'm not getting anything else right now.
Something to point out, we have appreciation at $16,000 for the year, where we already know that they're at 20 to 30 as of 3 months later, I guess. So I think that's one thing to look at. And then something I wanted to mention, and we'll have to do some other podcasts on it for our other clients to kind of highlight how creative everyone's being right now. So we have other clients again that are under contract at varying price points in this neighborhood, varying interest rates in this neighborhood. We have some people that are putting 30-35% down. We have some people that are doing medium-term rental strategies. So it's just, people are seeing that these are really good, versatile products, essentially, and just doing what fits their needs best.
Yeah, I mean, I like this play a lot. I know a lot, a lot of this complex we've talked about a lot. Like, I think it's a great play,
Mm-hmm.
and Springs is a very, very solid market to look in. And as inflation is picking up and real estate's a great hedge against it, not a bad place to park some money and just ride the wave of growth, inflation, price increases, and rental increases.
Yep.
Jenny, this is awesome. I know people ask, are there more of these available? And that's always a tough question to answer when it's a recorded podcast
Yes.
we're giving the answer on. So the best answer is they should probably reach out to you and Leah
Yep.
to get the scoop, right?
Exactly.
Because if it's not this, it's something else.
Yep, that's the best way to do it.
Yeah, there's always a deal. There's deals are like buses. You miss one bus, there's another one 15 minutes behind. You
Yep.
know, like there's always more down the road. So if this type of investment seems attractive to you, or potentially doing some portfolio optimization to trade up and make some moves like this, reach out to us. We'll help you put your game plan together. We'll help you show you what properties, what complexes, what strategies are currently working in whatever market you want to invest in, and we'll go from there. So reach out to me or Jenny. Thank you, Jenny, and thank you, everyone.
Thanks, Chris.